going to test out the laser. Does that show up on the big screen if I point it down here? I have to point, okay. Oh yeah, okay, well. I mean, and it only happens on one screen? Oh yeah, okay, well it's going to be a little bit hard. That's okay, I'll get back up. Hi, I am Nishtha Aggarwal. I'm a finance emissions analyst with Climate Energy Finance, a think tank that was established in 2022 to help accelerate the shift of capital away from polluting industries and into climate solutions. The two words in my role title, financed emissions, mean that I look at the emissions or the carbon pollution linked to the lending and investment activities of financial institutions. Climate Energy Finance was, as I said, established in 2022. We're philanthropically funded, and that allows us to remain independent and work in the national interest. That also allows us to collaborate with people. So coming out of the private sector, I noticed a really big shift in my ability to collaborate from this standpoint. So in addition to my role involving both research and analysis, publishing high-impact analysis to help accelerate that shift of finance, I engage regularly with investors, with businesses, and with environmental groups to knowledge share, better understand the issues that we're working towards, and also make an impact and move the dial where it counts. So I would love to take you through a story. I'm a little bit concerned that I can't use my laser because it will be data heavy. I've got way too many slides for a 17-minute presentation, but that's okay. So I might do a little bit of moving and pointing and see how we go. On the SDGs, I primarily work on 7 and 13, so climate action through clean, affordable energy. And my presentation today will focus on those ideas, but it will thread together a couple of insights around how we also achieve decent work, economic strength, and responsible production, whilst also achieving our climate goals. So let's take it from the top. Last week, the United Nations Secretary-General Antonio Guterres announced that the era of global warming has ended and the era of global boiling has arrived. And that's evidenced by heat waves and bushfires around the world, in North America, in Europe, in Africa, and at the same time, torrential rain and monsoons in Pakistan, in India, in South Korea. In 2015, 200 countries got together and signed the Paris Agreement. We committed to keeping global temperatures to 1.5 degrees Celsius, doing everything we could to keep it to 1.5, and definitely limiting it to below 2 degrees Celsius. And that 1.5 degree target was actually brought about by our Pacific Island neighbours that advocated and stood up and said, we can't go past 1.5 degrees Celsius. Every 0.01 degrees above that limit is catastrophic for their livelihoods, for their lives. We also know that, oh, and I should say, I would probably recommend, I'm just trying to narrate it to you, and sorry, I don't have jokes planned, mine's very data heavy, but also I will upload these slides on the Climate Energy Finance website tomorrow, so you can have a deeper look at the data. But to jump back into this, sadly we know that climate change disproportionately affects the poor. The top 10% of polluters own a significant amount of the wealth, and they suffer a tiny amount of the financial loss. The bottom 50% of polluters own a tiny percent of the wealth, but they will suffer the most hardship due to climate change. So what do we need to do to fix this problem? Well, this is a graph showing Australia's emissions profile. And what we can see here is that fossil fuel-related emissions are 84% of the problem. So we need to replace fossil fuels with clean energy. The combustion of fossil fuels for things like power, transport, and the fugitive emissions, when we dig up coal and gas from the bedrock, that all relates to that 84%. We also know that expanding the supply of coal, oil and gas is inconsistent with a 1.5 degree pathway. And that's evidenced by the International Energy Agency's roadmap. Now, they looked at the climate problem from both an economic and a science-based perspective and put out a roadmap that would address the world's energy needs. Inside that roadmap, they called for no new coal mines, no new oil and gas fields. And on the back of that, a global climate advocacy movement really took off, standing on top of that evidence, that science-based roadmap to reducing the impacts of climate change. And they call for the same: no new coal mines, no new oil and gas. We also know, this is a really tricky graph. This is where the pointer comes in handy. But we also know that now is the crucial decade to act. It's been really encouraging hearing that we're talking about the Sustainable Development Goals in terms of a 2030 target, because 2050 and net zero by 2050 is not enough. So just wondering if it is worth doing a little point. Maybe for my own storytelling it's useful. There we go. Okay. So that's right. So 2050, net zero by 2050 isn't enough. And in fact, in the years after, do I need to stand in the middle? Sorry, I'm really confused now. So in the years after the Paris Agreement, the problem was that we blew through a lot of our carbon budget, and that was really based on a decade of climate delay under the previous government. So we have to really accelerate the pace this decade. And in order to maintain our trajectory in line with the science, we would technically need to be aiming for net zero by 2038. That's a really close target. It's a mammoth task. It's really difficult, but that's what the science says. The 43% that you see on the graph is what the federal commitment is. And if we want to be science aligned, it would need to be a 67 emissions reduction target by 2030. So you can relate it to that previous graph where we looked at the Australia's emissions profile. That's sort of what we're working with. And in order to achieve these goals, global annual climate financing needs to reach in the realm of $6 trillion annually. Trillion. If you're thinking that's a big number, it absolutely is. But to put it into context, the global oil and gas market is that size. And so it is absolutely achievable that we shift capital out of polluting industries, out of polluting activities, and into the climate solutions we need this decade. Last year, investment in clean energy and fossil fuels equaled each other. So we actually need to shift now that 1-to-1 ratio into a 4-to-1 this decade, and then a 6-to-1 and a 10-to-1 by 2040. Really positive global news. China is absolutely outpacing the market in terms of energy investment in clean energy. They're outpacing the United States, they're outpacing the European Union, and they're setting new record-breaking capacity installations for solar energy. And it's out of this world. I wish I could have shown you a graph around the solar piece, but this was the best I could do in terms of showing how China is really placed against other nations. But the way that China is investing in solar is really edging us towards being able to achieve on our climate goals. It's worth noting that, yes, China invests a lot in coal, a lot in other energy sources, but it's also the biggest in terms of solar, wind, batteries, all of that. So China's sort of really leading the world, go big or go home. So we've looked a little bit at the global context. If we just ground in now into the Australian context, 2022 was a pivot point for climate action. So that was really driven off the back of fossil fuel hyperinflation when Russia invaded Ukraine. Effectively, and the sanctions against Russia effectively took out the world's #1 gas supplier. So that really sent energy prices soaring all over the world. Additionally, climate climate-related weather events were increasing. Here in Brisbane in 2022, we had the catastrophic floods in Brisbane and in other parts of Queensland and northern New South Wales. And importantly, we had the federal election that year that saw the redrawing of the political and policy landscape, a rise of a climate-conscious government, and they've made some really important and strong foundations for climate action in this country. So that's things like the legislated 43% emissions reduction target that I mentioned earlier, but also a commitment to power our national electricity grid with 82% renewables by 2030. That's backed in by strong policy moves. Nothing's perfect at the moment, but after a decade of climate inaction, we're seeing really big momentum. We're going to get there. The safeguard mechanism set a high and rising price on carbon that attacks the biggest polluters of Australia and requires them to ratchet down their emissions, as well as important structural support. And so things like climate-related financial disclosures are going to help to improve the consistency of information in financial markets that helps to then guide capital out of climate risks, and into climate opportunities. A national net zero authority, in terms of the federal commitments and the support that they're also providing to decarbonise the natural economy, is really important because it helps regions to transition in a just manner, socially and economically. When we look at Queensland's commitments then in light of that, we notice that the ambition isn't as high as the federal ambition. Nevertheless, there are some important moves being made. So that includes a $62 billion investment in a renewable supergrid, as well as, in tandem, decarbonising Gladstone, which has been economically significant and also a really polluting region. Okay, so we've looked at the domestic context of Australia. Let's just step into the export view. As much as we use in that light blue domestically in our gas, we export 3 times more. In fact, Australia is a petrostate, third only to Russia and Saudi Arabia. In 2022, fossil fuel corporations made $150 billion in profit at the same time when we were all thrown into a cost of living crisis. The good news is that gas was in long-term decline before the rise in those 2022 war profits. And you can see that on this graph with Woodside, Australia's biggest gas producer, underperforming the market consistently for 7 years before that 2022 point. That trend is set to further entrench itself as the global economy decarbonises, sending gas and other fossil fuels into long-term structural decline. Fossil fuel finance is also drying up across the board. The Australian banks, which is a focus of mine, they have strong policies on exiting from coal financing. And Whitehaven Coal last week announced that they weren't able to get refinanced for their $1 billion debt facility. In terms of oil and gas policies, the Australian banks are lagging behind, and it's largely because of that, really major source of income in the exports that we talked about earlier. But if we look to the global banks like HSBC, they've set the benchmark in oil and gas policies that starts to restrict financing to new oil and gas. If we just have a look at homes and clean energy homes, they're more affordable than fossil fuel homes. And that's because when in your home, if you've got gas appliances, if you've got a car that uses petrol, basically it's beholden to increasing fossil fuel prices as it gets difficult and more costly to extract fossil fuels from the ground. In contrast, with a renewable powered home that's electrified with solar and with an EV in the garage, there's an initial capital cost, but then after that it's free for the sun to shine and charge the batteries. That dream is becoming a reality, with the cost of solar and wind becoming very competitive with coal power and outpacing coal prices. That's combined with a dramatic reduction in battery prices. So, as we would expect, correlated with that reduction in costs, the global supply of solar, wind, and EVs is rapidly increasing. that's really good for Australia because we have the iron ore, the lithium, the critical minerals, other critical minerals, and rare earth to power the green economy. So what we need to do is double down and invest in securing the domestic economy by building value-adding facilities that refine the metals onshore, and the refineries are powered with renewable energy that we have the abundant resources, the land and the sun for. That's actually a really important move in the global context because our trading partners like India, Japan and South Korea don't necessarily have the land to be able to build renewables at scale like we do. And if we get it right, the opportunity is huge. Hundreds of thousands of clean export jobs can be created to displace fossil fuel exports and achieve our climate goals. The global clean tech race is very much underway. The United States has released $1 trillion worth of subsidies into the global market under its Inflation Reduction Act, and that's seeing investment across clean energy and transition technologies across the board. So Australia really does have a once-in-a-lifetime opportunity to power the global green economy. And at Climate Energy Finance, we're working to accelerate public funding, and we're calling for $100 billion additional public funding that will act to de-risk projects, that will act to crowd in an additional $200 to $300 billion in private financing this decade and help us to achieve that once-in-a-lifetime opportunity. So we at Climate Energy Finance, we study financial markets, and we know that when the money moves, get out of the way. There's no time for climate delay, and global investment in clean energy is really presenting us with that opportunity to seize a massive economic opportunity, as well as invest in clean, affordable energy and meet our climate goals at the same time. Thanks.